Hello, my dear friend. It's me, Mary, your personal trader. Today, I will show you a simple and profitable strategy called Navigator. First, the practical part, and then I will introduce you to the settings and theory. But you can already subscribe to my YouTube channel where I publish new videos every week. Also, please join my Telegram channel, the link is in the description, where I conduct live sessions with subscribers and provide accurate signals. Let's see how the Navigator strategy works on a real chart. Here I have the Euro and USD currency pair. Notice that the RSI has crossed above the 70 level, indicating strong overbought conditions, and correspondingly the CCI has also entered the overbought zone. We can proceed to the trading platform and look for a Euro and USD pair. By the way, there is a nice payout of 92% here. I will open a downward trade for 5 minutes with a stake of $1,000. The price is actually rising, indicating even stronger overbought conditions. This is quite good because the higher it remains, the higher the likelihood that our trade will end up in a confident profit. The 5-minute time frame chart confirms that the price is overbought with very high RSI and CCI values, so the trade should end well. What is the essence of the Navigator strategy? Its idea is to enter a trade before a strong retracement occurs in the market after an impulse movement. It works ideally on a 1-minute time frame, but it can also be used on a 5-minute chart if done wisely and with proper money management. The expiration time for this strategy is 5 candles. This means that on a 1-minute time frame you need to enter for 5 minutes and on a 5-minute time frame for 25 minutes respectively. The indicators should be used with default settings. For RSI, it's a period of 14 and levels marked at 30 and 70 indicating oversold and overbought conditions. CCI is also used with default settings, meaning a period of 20 and levels marked at plus 200 and minus 200. CCI is not as popular as RSI, but it works on a similar principle. If the indicator line rises above 200, it means that market is overbought and may drop. Conversely, if it drops below minus 200, it means the market is oversold and will likely rise soon. In the Navigator strategy, we enter a trade if 2 conditions are met. First, an impulsive movement forms on the chart, meaning there are several relatively long candles of the same color without long wicks or one huge candle. In general, the price rises or falls rapidly. During this impulse, the RSI indicator enters the oversold or overbought zone, and at the same time, the CCI also enters the oversold or overbought zone. To simplify the rules, it goes like this. The chart has significantly risen or fallen, and RSI and CCI have crossed their respective marks. This should happen within the time frame of a single candle. RSI and CCI should simultaneously be in the oversold and overbought zone. This is crucial because if one of the indicators doesn't show an extreme price condition, the impulse could continue. It's also important to enter not after 2-3 candles, but after 5 candles or even 7. The impulse could continue for a few more minutes, so having a time buffer is crucial for traders to react and for the price to start retracing. As you've noticed, I explained for each strategy how many candles and on which time frame you should enter. In binary options, this is very important as a lack of 10 seconds can result in a loss. Therefore, all strategies are not just a set of indicators, but also include timing conditions. So there are only 2 minutes left until the end of the trade. Let's wait for its completion. Well, there you have it. The trade confidently closed in profit. The retracement occurred just a minute after I entered the trade. This is a profitable and simple strategy. The idea of the strategy is to trade on the retracement after an impulse movement. The trading is conducted on the M5 time frame for digital options and H1 for Forex. Both majors and highly volatile crosses are suitable for trading. It's a quite simple system. Its foundation is based on 2 standard indicators, RSI with default settings, Used to monitor the market's conditions, signals are used in the form of reversals from overbought or oversold zones. The zone boundaries are set at the levels of 30 and 70 for oversold and overbought conditions respectively. CCI with a period of 20. Applied with the same logic as RSI, the key levels are plus and minus. If the commodity channel index line falls below the minus 200 level, the likelihood of a chart increase rises. The situation is reversed at the plus 200 level. For it to work, the simultaneous fulfillment of the following conditions is necessary. On the chart, an impulse movement is forming. An impulse refers to a directional movement consisting of full-bodied candles of the same color. Impulses formed by a single candle are also considered. Due to this movement, the RSI enters the oversold zone on a decrease or overbought zone on an increase in the chart. During this time, the commodity channel index drops below the minus 200 level or enters the area above plus 200 on an increase. The entry point occurs when both indicators simultaneously reverse. This is a key aspect of the strategy. It's important for both RSI and CCI to reverse on the same candle. The signal is confirmed within 3 to 5 candles, making this approach suitable only for trading digital options, where there is no spread and option profit doesn't depend on the price distance. Situations where the indicators reverse with a difference of 1 to 3 candles are better to skip. The retracement after impulses can be brief, and due to the difference between RSI and CCI signals, by the time the entry point is confirmed by both indicators, the rebound may already be over. Entry points are also disregarded if the retracement on the signal candle exceeds 38.2% of the impulse size. Continuation of the retracement is unlikely, and the chances of the option closing in the money are reduced. Navigator is an effective strategy for trading binary options based on predicting the reversal of the current market trend. An important advantage of this method is the ability to work successfully on short-term timeframes. Many traders operating on 5-minute periods demonstrate quite decent results. Price movement changes can be either minor breathers or the start of a strong trend in the opposite direction. In any case, the trader's main task is to determine when this will happen. The decision is complicated by the fact that the trend can end practically at any time. To identify points where powerful impulse movement weakens, popular trend oscillators RSI and CCI are used. As I mentioned, our task is to identify points where the current trend is fully weakened. This requires identifying zones where the asset becomes oversold or overbought. In the first case, this means that the price has decreased enough to stop falling further in a downtrend. Similarly, overbought implies expecting a halving growth in an upward. In our case, these zones will be from 70 to 100 for RSI and from 200 for CCI in the overbought zone, from 30 to 0 for RSI and below minus 200 for CCI in the oversold zone. If the charts show that the price has reached the overbought boundary during an uptrend, according to the Navigator strategy, it's worth considering purchasing a put option. Entering the oversold area in a downtrend implies buying a call option. Well, that's it. I believe I've explained everything in detail and accurately, even multiple times. Thank you for your attention. It's very pleasing to see your subscriptions, likes, and comments. Your activity truly brings me joy. So please make use of all YouTube's features and make me happy. If you want me to be your personal trader, follow the link in the description to my Telegram channel and subscribe. Let's work together. See you soon. Goodbye.